to a lot many more speakers joining us for our remaining sessions. I'd once again like to request all of you to please share your feedback with us. Do remember to sign in the feedback form, because it's your feedback that helps our entire team at Sapphire Connect come back with such fantastic platforms yet again. So making this digital platform a very interactive one, we want all our delegates to get a chance to win and win big, which is why we have some spectacular gift vouchers from Amazon all for you. All you've got to do is participate in the various polls that we are conducting through the day. Be active, be all around. Tell us what you think about the show that's going on right here. Join the conversation, include more people, head to your social media and share with us what you think about our various speakers and sessions that we've put together for you. Up next is yet another interesting session on the digital shift, e-commerce and payments method, which will be taken over by Mr. Saurabh Sinha, Vice President and Regional Head, FinTech, e-commerce and payments, TransUnion CIBIL. In case you'd like to connect with the team, they will be available post this talk or at their partner booth of TransUnion CIBIL. So let's look forward to that. And for now, may I request all of you to please be set for this very, very interesting session that we've lined up for you, the Digital Shift, E-Commerce and Payment Methods, by Mr. Saurabh Sinha, Vice President and Regional Head, FinTech, E-Commerce and Payments, TransUnion CIBIL.
Isha, I hope you can all hear me. Isha, if you can confirm that for me, I can get started.
Absolutely, and we're looking forward to the very interesting chat that we're about to receive from you. Buy now, pay later, new business model. A lot of interesting conversations, and I'm also looking forward to our audience sending in some questions for you.
Right, thank you so much, Isha. Are you able to hear me and see me clearly?
Absolutely. Please go ahead.
Super. Right, so thank you so much, Sapphire Connect and Payground, for first of all putting together this wonderful summit and for giving me this opportunity. Good afternoon to all the delegates. I'm Saurabh Sinha, and I lead the FinTech payments and e-commerce businesses at TransUnion CIBIL. It is my distinct pleasure to address this audience at a time when the entire FinTech sector is rapidly scaling, innovating, and evolving, especially digital payments and digital lending, which have gained significant scale in the recent years. India, as you may all know, is home to one of the most vibrant and diverse fintech ecosystems globally, with over 2,100 plus fintechs, of which, interestingly, 67% of them have been set up only in the last 5 years. And who knows what the near future holds. Digital payment firms, especially, are moving into buy now, pay later, or BNPL as it's come to be known. So are big techs, right? Big tech companies like Google, Amazon are moving into payments, BNPL, hyperlocal e-commerce. And so have digital lenders as well. They've all shifted focus to consumer lending, which is in the smallest ticket sizes with the highest of velocities. Now, this essentially means that the lines are blurring, and there has never been a more exciting time to be in this ecosystem than now. Now, touching upon consumer lending specifically before I move to BNPL, fintech lenders have driven tremendous scale since late 2018 and gone on to almost exclusively focus on the small ticket personal loan space. When I say fintech lenders, I really mean NBFCs that are built ground up digitally, right? And they are exclusively, like I said, focusing on the small tickets. I'm really talking about under rupees 25,000 as a ticket size. Now, the scale of this is to the extent that now fintech NBFCs and that lending accounts for over 60% of all quarterly personal loan originations in the industry, right? Now, it is starting to represent the entire industry, which is moving to low ticket. Of course, the velocity has gone up as well. Now, this consumer lending is taking a new shape, which is BNPL. And this is happening globally. The origins of modern BNPL go back to Sweden, where in 2005, Klarna was founded, and it scaled across Europe. Similar propositions were launched in Australia by Afterpay and in the US by Affirm. Along with others like Sezzle and QuadPay, these BNPL players have scaled and seen rapid adoption globally, which is representing about 2% of all global e-commerce gross merchandise value or GMV transacted. In India, BNPL started really around, and I say BNPL, I mean modern BNPL, the way it's been transformed by technology, transformed through very friendly user experiences. That BNPL avatar really started in 2015 with the likes of Simple and Lazy Pay. And at last count, there are over 27 scaled BNPL players in the country. As per a Goldman Sachs report, BNPL today accounts for 3% of the $99 billion Indian e-commerce GMV market that is transacted annually. Now, these may sound like small percentages, right? 3% sounds small, but as per the same report, this is set to grow to 9% adoption by 2024, which is just in 2 years, right? It's going to triple. And mind you, the e-commerce industry also, in the meanwhile, is going to grow 65% year on year, which basically means that the share of the pie is, of course, increasing, but so is the size of the pie, making it almost a $12 billion opportunity in the next 2 years, right? While the opportunity is massive, there is no single clear definition of BNPL, as it is a sum total of many characteristics, I believe, right? Such as easy availability to large transacting audience at the point of sale, whether it's online or offline, 0% interest, flexible repayment tenures, and almost no minimum size of the transaction, making it very suitable for everyday purchases. This is the reason why it is becoming so popular, almost ubiquitous. It can be argued, of course, that this is similar to khata or credit cards or consumer durable loans, right? And I get this question very often. However, BNPL is fundamentally different. If you put all of these core tenets that I spoke about all together in a very frictionless, consumer friendly shape and form. It is also the only credit instrument that offers so many consumer friendly features, right, within the product. It also, of course, helps merchants improve their average order values, or AOVs as they call in the world of e-commerce, as well as improve the cart checkout rates and reduce cart abandonment rates, which merchants really pay for through merchant discount rates, or MDR. Incidentally, that also is the primary source of revenue for BNPL players, aside from a small portion coming from consumer late payment fees. Now, when we look at bureau reporting of BNPL lending, it is largely reported as a personal loan or a consumer durable loan. However, we at TransUnion CIBIL have been able to scan and sift through all of that data to identify what is true BNPL reporting. And what the data tells us is that the industry is already doing about 3.5 million BNPL originations quarterly, amounting to around rupees 3,000 crore. Now, remember, this industry is a very new industry, right? We're talking about 2.5 years when true BNPL scale up has started. Of course, the scale and value that I spoke about sees its usual seasonal spikes, right? Around the festive sale periods where discounts on 0% credit products become very attractive. My gut feel is that all BNPL data, if it was reported to the Bureau, some of it isn't, because some BNPL plays are today done by non-licensed BNPL lenders as well, or payment providers. That actual scale could be closer to 5 to 6 million BNPL transactions quarterly. Now, of these different transactions that we see, the most popular construct is a 15-day product, followed by the monthly or pay next month construct. And then the least popular one is the quarterly product. Of course, there are even weekly and annual product variants that exist. However, as you would imagine, these aren't very popular. Now, overall, as an industry, 61% of new BNPL lines close within 3 months. So that just reiterates for you that when it comes to unsecured small ticket credit, it is taking a velocity which has never been seen before, right? 61% within 3 months is the closure date. Now, the average line utilization or the average ticket size is closer to around 9,000 rupees. But when we study the market, we're seeing the scale of transactions which are under 5,000 rupees really picking up. It has really gained scale in the last 12 to 18 months. And I suspect that the in the future, when we do this analysis, the average ticket size will only continue to drop, which basically means unit economics will get even tighter. Now, for the BNPL industry to continue scaling, we will need a lot more judicious innovation and a stronger risk management framework. And I'll try to throw some more light on why I say that, right? Today, the cost of acquisition for a BNPL consumer is steep because consumers are, unlike other credit products, routed to an e-commerce or a point of sale platform, which can have several leakage points until a purchase on the chosen payment instrument is made, right? So click to conversion is a longish journey with many leakage points. Now, it's extremely important, hence, to have a solid strategy in mind, right? A solid strategy around what e-commerce brands do you partner with? What's your product construct? What are your sweet spots on tenures? And how do you target customers? How much are you willing to spend on them? How do you onboard the right merchants? What's your long-term roadmap? What we also see is that delinquencies on such BNPL products are already 3 times that of small ticket unsecured loan products, right? Basically, that means that early delinquencies are a concern. But I feel that a bigger risk is fraud risk, right? With enough instances of SIM swaps, account takeovers, and other modes of frauds causing high loss rates. And that's where I feel that robust risk management is a key tenet that BNPL lenders have to adopt, embrace to be profitable in the future. The other way to profitability is to drive high loyalty because, like I said, the revenue side is primarily MDR driven, right? Which means the more the transactions, the more the revenue, which means high loyalty and repeat transactions are the way to go. Also, cross-sell, upsell, if you offer other higher ticket products, credit, wealth, whatever it may be, is extremely important, and so is digitally collecting on your consumers. All of this done real time, actively, proactively, right? No more can lending be done the way it has traditionally been done because BNPL is the modern technologically revolutionized avatar of a consumer credit product, which is why it is so popular. Now, obviously, regulation will play a large role in solving for a few KYC as well as data reporting norms. Of course, it will help if regulation comes in to scale this industry responsibly, to prevent bust out fraud, to prevent too much of credit risk being taken. But as things stand today in India, BNPL regulations are still awaited. There is a direction from the regulator, as is there a direction from many other regulators in many other markets. The interesting thing is BNPL specific regulations do not exist in any global market. And we're just at the cusp of all of those regulations coming. So it's extremely exciting, when it comes to where we stand in the entire BNPL scale up story. I truly believe BNPL is the future of consumer finance. It will take a lot more innovation, a lot more investment in robust practices to be able to scale it responsibly. I'm at the end of my address and I'd love to take some questions, but I hope this information and this talk was useful towards your understanding of BNPL and what this whole revolution is all about. Thank you.